Ladies and gentlemen, my name is Greg Michalowski. Adam Button recently posted a comment or a post by us recommending a trade from CItibank. It was CItibank's trade of the week. CItibank recommends buying the pound versus US dollar at 151.92, targeting 153.90 with a stop loss of 150.60. So they're targeting about 200 pips to the top side. They're risking about 130 pips on this trade. The last trade, however, has moved down since CItibank's recommendation. CItibank bought it at around 151.92. The price is currently trading around 151.51, so about 40 or so pips lower than their entry level. Is it a good time for you to buy? Do you buy it here and put your stop in at the 150.60 level on the downside that CItibank recommends? What about the target on the top side? Is the 153.90 level, which is up here, is that a level that you should target? Are there other levels that are going to be much more difficult to get to and through that might stop that target from getting reached? I like to look at targets in step-by-step process. So let's take a look at this trade from my perspective, from where we sit right now here at the 151.50 level. What do we see here from the hourly chart? Well, if we connect these highs right here, high with a high, we went through that high right here on the last Wednesday's trade, but it was quickly rejected, and then we reestablished that high right here, right here, right here, right before the unemployment report shot the price through the upside there. Now our high prices right here found resistance against this high, and this high today found resistance against there, and that forced the market to the downside. We had more bearish news coming out of the UK today, which also helped the price move lower. Probably got CItibank filled and also sent the price through their level on the way to the downside. Now, we are currently at this level right here, and we're also, what do we do in trading here today? We tested the underside of that old trend line right around here. Market came down to that trend line. We're finding some support against that level. Now, what's above that level that's of significance? It's this blue line right here, and this blue line represents the 100-hour moving average. And since breaking up here, the market's been below that 100-hour moving average for most of the time on the way down, except for a little bit right here where we found resistance, and then we found right here against this trend line where we found resistance and moved below. It wasn't until the employment report that the market started to move back above that line. Well, today we fell below that 100-hour moving average right here at around the 151.59 level. So we have this trend line down here. It comes in at 151.39. We have this 100-hour moving average here at 151.59. Do I recommend you buying the pound versus US dollar now? You could, but I would prefer that we see the price move back above the 100-hour moving average. If we move above the 100-hour moving average, then we would have held the trend line. We are above the 100-hour moving average, and we have some work to do on the top side, but at least we can use the trend line as our stop. If we move below that trend line, give yourself about 5 or 6 pips on below that line, then we're risking this much on the trade for the potential to move higher, okay? Now, CItibank has the high being 153.90. I may not go that high, but I'm risking a lot less than they are on my trade, aren't I? They're risking all the way down to 150.60. That's all the way down here, right about that level right here. For myself, what am I risking? Buy above the 100-hour moving average. Put your stop below this trend line right here, 5 or 6 pips to the downside. I'm risking this amount. They're risking this amount. Okay, now where's my target on the top side? My target on the top side is going to be dependent on getting through other targets. And so if we get above the 100-hour moving average, what's our next target that we need to get to and through? This green line represents the 200-hour moving average, and that currently comes in at 151.84. That's going to be our first target to get to and through. Note in trading here today during the New York session, the market found resistance against that level after breaking back below, and we found resistance and moved lower. So in order to move higher, we need to get above and stay above the 200-hour moving average. Target number 1. Target number 2 is this yellow area right here. This yellow area has a bunch of lows and highs. I'm going to count them out. This low right here, this low right here, this low right here, this low right here. We fell below, and then we use this as a high, a high, a high, broke above it a little bit for a couple hours, went below and used it as resistance, resistance. And then we had a couple days here through the unemployment report where we moved above and below it. The last thing that we did in trading here today was use that top side resistance level at the 152.13 level as a resistance level before moving to the downside. So I see that level, this area here, as a area of resistance, 152, 152.13.8. Get above that level, then we're going to be moving up to this next level right here, where we have a high right here. Well, we have highs right here, high right here, high right here, and the highs in trading here today went a little bit above that level, maybe by about 5 or so pips before falling back to the downside. That too is going to be a key level and a tough level to get to and through on the top side. So although it's nice to envision that we're going to go all the way up to 153.90, you can see that the road up there is going to be filled with some potholes, some levels that we need to get to and through. They're all doable, yes, but we do need to get to them, and I like to see the market and in managing a trade, manage through these levels, manage through 1, manage through 2, manage through 3. Once we get through that level, then we're going to have this highs right here, 1, 2, 3 different highs. It also corresponds with the low right here, so that's level is going to be important. And then we get to this area right here. You see the 38.2% retracement, that's of this move down from this high right here to the low right here. 38.2 comes in at 153.16. Behind that is the 200-day moving average. I'm going to go to the daily chart. I'm going to show you what that looks like. That's this green line right here, and it comes in currently at around the 153.21 level. So let's go back to our hourly chart, and you can't see it here, but at that level right there, it says 153.21. 38.2 comes in at 153.16, 7. And so with a 200-day moving average, 38.2% retracement level at the same area within 5 pips of each other, that's going to be my profit level. If we're able to get to and through all these levels on the top side, that's where I'll be targeting for trading this week as a level where there's going to be a real tough time getting through that level. So the difference between my trade and Citibank's trade is Citibank goes in long here around the 151.90. I can see why they went long, 200-hour moving average. It went below that level, tough luck, but they have a stop way down here at 151.60. My level or my trade here leans against the broken trend line here and the 100-hour moving average. We still need to get above the 100-hour moving average though in order to use both the 100 and the trend line as our risk defining level. And I'm going to put my stop about 5 or 6 pips below that level. And as long as the price remains above this area right here, and it should, if we break back above the 100-hour moving average, we should see the price start to move higher. Now, our target levels for Citibank just comes in at 153.90. For me, we need to get through this. We need to get through this area. We need to get through this high. We need to get through this low and this high right here. And right here at the 38.2 and the 200-day moving average, that's probably going to be my limit on the trade. I'm going to manage a trade from step to step to step. If we can't get above the 152.43 level, I'm going to manage my stop up probably to around the 200-hour moving average. If we get above that level, I'm going to manage my stop up probably to the 153.43 area. And if we get above that level, I'm going to look to take profit right here against the 38.2 against the 200-day moving average. That's the difference between me and Citibank. What do you think? My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.